Hi, my name is Dean Mead, and I'm a partner and government and public sector subline leader with Carr, and Ingram, or CRI. If you are unfamiliar with the financial statements of states, counties, cities, school districts, and other governmental entities, you may see something that you've never seen anywhere else. In addition to assets and liabilities, essentially things the government owns and amounts it owes to others, a government's balance sheet probably also includes separate sections for deferred outflows of resources and deferred inflows of resources, items that are unique to government financial statements. The purpose of these short videos and the other resources they accompany is demystifying deferrals. Let's get something out of the way immediately. Their names are confusing. Their names suggest that there has been a delay in resources like cash or promises to pay flowing into or out of a government's coffers. But that's not the case. Throughout the year, a government receives payments and makes payments, and most of the time those inflows and outflows of resources relate to the fiscal year in which they occur. As a result, they usually are recorded as revenues and expenses in the government's income statements. Occasionally, though, a payment received or made during the current fiscal year actually relates to a future fiscal year. Those inflows and outflows are recorded temporarily in the government's balance sheets as deferred inflows of resources and deferred outflows of resources, respectively, until the future fiscal year arrives. At that time, the revenues and expenses are recorded in the income statements. In other words, it's not the inflows and outflows that are postponed, like their names suggest. It's the recording of them as revenues and expenses that is postponed until a future fiscal year. That may be a lot to grasp up front, so let's take a step back and walk through it again. During the course of the fiscal year, a government receives cash, a promise to pay, or some other kind of resource. Most of the time, that inflow of resources relates to the current fiscal year and is reported as revenue in this year's income statements. Sometimes, though, that inflow of resources relates to next year or some other fiscal year down the road. When that happens, a government initially reports the inflow as a deferred inflow in its balance sheets. When the appropriate fiscal year begins, the government removes the deferred inflow and reports revenue. The same is true for the flip side of the transaction. During the course of a fiscal year, a government gives cash, a promise to pay, or some other kind of resource to another party. Most of the time, the outflow of resources relates to the current fiscal year and therefore will be reported as expense in this year's income statements. Sometimes, though, the outflow of resources relates to next year or some other fiscal year down the road. When that happens, a government initially reports that outflow as a deferred outflow in its balance sheets. When the appropriate fiscal year begins, the government removes the deferred outflow and reports expense. At the risk of being repetitive, let's go through that one last time with some visual aids. A government receives resources that are related to either the current year or a future year. Most of the time, the resources are related to this year and will result in the government reporting revenue. Occasionally, the resources are related to a future year and will result in the government reporting a deferred inflow initially, and then revenue when that future year arrives. Likewise, a government gives resources to someone else that are related either to the current year or a future year. Most of the time, the resources are related to this year and will result in the government reporting expenses. Occasionally, the resources are related to a future year and will result in the government reporting a deferred outflow initially, and then expenses when that future year arrives. You might respond to the preceding slides by saying, deferred outflows of resources sound a lot like a prepaid asset. And you'd be right, they are similar. If a government pays 6 months of rent in advance for office space, it initially reports an asset called prepaid rent. Over time, as the government occupies that space, the prepaid rent asset is reduced and rent expense is reported. That does sound a lot like the descriptions we've seen of deferred outflows. However, as an asset, Prepaid rent is a resource that provides service capacity that a government can use for operations or to provide services. The government also might convert it to cash by subletting the office space to someone else. But a deferred outflow has none of those properties. It can't be used to provide service. It doesn't generate income to finance the provision of service, and it can't be sold to produce income. A deferred outflow is only an expense waiting for the right period to be reported. You might also think deferred inflows of resources sound a lot like unearned income. And you'd be right, they are similar. If a government receives 6 months of rent in advance from a company for the use of a public facility, the government initially reports a liability, which might be labeled unearned income. Over time, as the company occupies that facility, the unearned income liability is reduced and rent revenue is reported. That does sound a lot like the descriptions we've seen of deferred inflows. However, as a liability, unearned income represents an obligation for the government to allow the company to use the facility for the next 6 months, during which the government can't use the facility. A deferred inflow, on the other hand, is not an amount owed to another party or some other kind of obligation. It doesn't mature, and it doesn't require the government to sacrifice resources to satisfy it. A deferred inflow is only a revenue waiting for the right period to be reported. CRI provides a range of free resources to help you understand deferrals. In addition to a recording of a detailed presentation, Demystifying Deferrals, there are other short takes videos like this answering key questions about deferrals, as well as slide decks for all of the recordings, a companion slide deck that dives into the technical requirements of all of the deferrals required by the GASB, including debits and credits, a short plain language article that covers deferrals in a nutshell, a longer plain language article that covers the same ground as the detailed presentation, a third plain language article that explores how municipal bond analysts, taxpayer associations, legislative staff, and other users of financial statements can utilize deferrals to evaluate a government's financial health, make decisions, and assess government accountability. And best of all, an ebook that encompasses all of those resources and can be found on CRI's website at criadv.com.